Right now, the biggest wealth transfer in modern history is being set up, and most people have no idea it's coming. By 2026, the tech bubble we're living in could pop with a force that makes 2008 look like a warm-up. Trillions will evaporate overnight, but here's what they don't tell you. Every market crash creates more millionaires than the boom that came before it. The question isn't if you'll survive the crash, it's whether you'll be smart enough to profit from it. We're in the middle of the greatest speculative mania since the dot-com bubble. AI companies with zero revenue are valued at billions. Venture capitalists are throwing money at anything with artificial intelligence in the pitch deck. Nvidia's market cap hit over $2 trillion. OpenAI is valued at more than $100 billion, despite burning cash faster than it can raise it. Sound familiar? In 1999, companies added .com to their name and watched their stock price double overnight. Now in 2025, everyone's an AI company. But here's the thing. The technology can be revolutionary, and the stocks can still be wildly overvalued. Both things can be true at the same time. Price-to-earnings ratios are at levels we haven't seen since the dot-com peak. Companies are trading at 50, 60, even 100 times their revenue. Some don't even have revenue yet. They have PowerPoint presentations and promises. Why? Because institutional investors are sitting on mountains of cash they need to deploy. So they keep pouring money in. Valuations keep climbing. But every boom has its breaking point. Most analysts are pointing to late 2025 or early 2026. Let me take you back to March of 2000. The dot-com bubble had been inflating for years. Then, on March 10th, 2000, the Nasdaq peaked. By October 2002, it had lost 78% of its value. $5 trillion gone. But here's what most people forget. Not everyone lost money. Some people saw it coming. They sold near the peak, sat on cash, and waited. In 2001, you could buy Amazon stock for $6 a share. Today, it trades at over 180. That's a 30x return. The crash didn't kill the internet. It killed the pretenders and made the patient investors incredibly wealthy. Fast forward to 2017. Bitcoin hits $20,000. ICOs are raising hundreds of millions for projects that are literally just white papers. Then, in 2018, Bitcoin drops 80%. But the smart money was buying. By 2021, Bitcoin hit 69,000. That's a 13x return in less than 2 years. See the pattern? First comes innovation. Then comes hype. Valuations disconnect from fundamentals. Then reality sets in. 90% of companies fail. But the 10% that survive become the Amazons and Googles of the next era. The AI bubble of 2025 might be even bigger than anything we've seen before, which means when this bubble pops, the crash could be catastrophic. But what if this time, you're on the right side of it? Let's talk about how smart investors actually make money during crashes. They don't panic, they prepare. Here's what the smart money is doing right now. First, they're building cash reserves. When the market crashes, cash becomes the most valuable asset in the world. Warren Buffett calls it having cash when others are scared. Right now, Berkshire Hathaway is sitting on over $150 billion in cash. He's waiting for the sale. Second, they're identifying which companies will survive. During the dot-com crash, most companies died. But Amazon, Google, and Apple didn't. Why? Because they had real business models, actual revenue, and paths to profitability. When evaluating AI companies today, ask yourself, does this company have real revenue or just venture capital funding? Are they solving an actual problem or just riding the hype wave? Will they still exist in 5 years? Third, they're looking at fundamentals, cash flow, debt levels, actual profit margins. In a bubble, these things seem irrelevant. But when the crash comes, fundamentals are the only thing that matters. Here's a thought that might blow your mind. The best time to make money isn't during the boom, it's during the crash. During a crash, good companies are being thrown out with the bad. And if you've prepared, you can buy incredible companies at ridiculous discounts. In 2008, you could buy Apple stock for under $3 a share. In 2020, during the COVID crash, you could buy tech stocks at 40% discounts. Every single crash creates generational buying opportunities. But you have to be psychologically prepared to buy when everyone else is selling. When it feels like the world is ending, that's when you need to be buying. So what's the plan? 1. Build cash reserves, maybe 30 to 50% of your investment portfolio. 2. Make your shopping list of 10 to 15 high-quality companies you'd want to own if they dropped 50 to 70%. 3. Set your buy triggers in advance. When the crash comes, you just execute the plan. This is how regular people become wealthy. So let's talk timeline. Right now, in late 2025, we're in the euphoria phase. Late 2025, the cracks start to show. A few high-profile AI companies miss revenue projections, but the market ignores these warning signs. Early 2026, the cracks become fissures. A major AI company admits it has no path to profitability. Their stock drops 60% in a week. Suddenly, investors start asking uncomfortable questions. Mid-2026, the avalanche. Hedge funds are forced to liquidate positions. Margin calls trigger more selling. The Nasdaq could drop 40 to 50% from its peak. AI stocks could drop 70 to 80%. But here's the thing. This crash won't kill AI. The technology will keep advancing. And in 12 to 24 months, the survivors will emerge stronger than ever. Late 2026 into 2027, the recovery begins, and the smart money that bought during the panic is sitting on massive returns. This is the wealth transfer. From the panicked to the prepared. Most people watching this video won't do anything with this information. They won't prepare, and when the crash comes, they'll panic. But you're not most people, are you? Think about this. Every major crash in history created a new class of wealthy people. The 2008 crash created fortunes for those who bought bank stocks at the bottom. The dot-com crash created fortunes for those who accumulated Amazon and Google. Crashes don't destroy wealth. They transfer it. So here's my challenge to you. Over the next 30 days, build your plan. Decide how much cash you want to have ready. Research the companies you'd want to own at 50% off. Because when 2026 comes, you'll be one of two types of people. The person watching their portfolio collapse in real time, or the person who's been waiting for this moment. Which person do you want to be? The greatest wealth creation opportunities of your lifetime happen during market crashes. While everyone is panicking, fortunes are being made. Every crash writes new millionaires into the history books. The only question is, will you be one of them? The 2026 tech bubble is coming. It might make you rich, or it might wipe you out. The difference is what you do right now, today, while there's still time to prepare. If you found value in this breakdown, hit that subscribe button. The best investors aren't the ones who make money during the boom. They're the ones who are ready when everything falls apart. Thanks for watching.